Alright, hello and welcome to Camel Finance. I'm your boy Camel, and by the time you're seeing this, I hopefully will be into some fish, okay? So this is being recorded on Friday, but as I've made all of you well aware multiple times, I should be fishing on Tuesday, hopefully. But of course, I didn't want to leave you with no content. So I was trying to think of something that is not time sensitive, and a lot of people have been asking me to look at Japan and the Japanese yen. So I thought I'll have a crack at that today, and hopefully we do a reasonable job of it. So I think the first thing we want to know is that Japan and China have been the largest foreign holders of US debt for the last 2 decades. China is the number 1 holder of US Treasuries, and Japan is the number 2 holder of US Treasuries. And for the last year or so, the Japanese yen has been just non-stop losing value against the dollar. Meanwhile, the Chinese yuan, for the last year has been relatively stable, as you can see here. And so the situation is this: China doesn't actually care about the value of its currency versus the dollar, and neither does Japan. They both actually really care about the value of their currency versus each other. And this is largely because of the export market, right? China and Japan both compete over that export market. And if one of them has a stable currency against the dollar, then the other one, in this case, say Japan, who has a falling currency, makes it more difficult for China to keep up. So if the JPY, the Japanese yen, continues to go down, China are forced to devalue their currency in order to maintain competitiveness in the export market. And this is where it starts to get very, very interesting, because China will devalue its currency. But one of the ways the FX markets work is that they can actually control the rate of devaluation by selling US Treasuries. And this stops the CNY plummeting lower and actually allows them to have a much more orderly devaluation, a much more orderly walk down. And there's an interesting dynamic at play here, because whilst you've got Yellen and Powell trying to keep the Treasuries stable, you've at the same time got the 2 largest holders of Treasuries in the open market dumping them. And of course, when the rest of the world sees that China and Japan are selling Treasuries, that motivates them to sell as well. And so if we continue to see significant sell-side pressure come in on the US Treasuries, the Fed is going to be forced to pivot and start printing again. Overall, we end up in this quite weird situation where we've got the yen being devalued against the dollar. Japan can't actually stop devaluing the yen because it's the biggest holder of its own bonds, which, if you really think about it, is pretty crazy, right? But it stands to lose the most money. It could actually go bankrupt if it doesn't stop debasing the currency. So Japan actually stands to lose the most money by raising rates in an attempt to control the inflation and the fiat debasement. There's a very, very weird situation for Japan. Meanwhile, since Japan can't actually stop debasing the JPY, China therefore has to debase their currency, like I said, in order to keep up a competitiveness within the export market, which ultimately means China will have to sell treasuries. And again, this puts pressure on the USA to cut rates and potentially even print, which goes completely against their current rhetoric. Of course, the Fed loves to stand here and say higher for longer, no rate cuts, maybe even another hike, right? But the reality is, the longer this situation goes on for, the more pressure the US is under to actually cut rates. And it's likely that this is what the bond market has been starting to price in of late. But to build on point 5 just a little bit more, just a couple of months ago, we saw coordinated central bank action to enhance the provision of the US dollar liquidity. What does that mean? It means the Bank of Canada, the Bank of England, the Bank of Japan, the ECB, the Federal Reserve, and the Swiss National Bank have just launched something called US dollar liquidity swap line arrangements. Camel, what on earth is a swap line? A swap line essentially works like this, The Fed, the Central Bank of America, can borrow Japanese yen, and the Bank of Japan can borrow USD, and then they swap them over via these swap lines at an agreed upon rate. So what this really means is Japan can source an unlimited amount of dollars to help stabilize the yen without actually having to sell treasuries or raise rates. Remember, it can't raise rates because it stands to lose the most, and the US don't really want them dumping treasuries. That's likely why we've seen these swap lines become a thing in the past 8 or so weeks. Believe it or not, these swap lines, at least in the short term, are a win-win, because we've got the Fed here that wants an increase in dollar liquidity to prevent that whole dollar milkshake thing going on, and Japan don't want to go broke. right? So everyone's kind of winning here. At the same time, China don't really want Japan to continue to debase its currency either, because that forces China to debase their own currency, like I said earlier, to maintain this competitiveness in the export markets. And not to mention, of course, Yellen, the last thing she wants when she's trying to maintain a stable treasury market and dollar liquidity is the treasuries being sold off by the two largest holders of treasuries globally. And of course, the more they start to dump them, the more that motivates other people around the world to dump them as well. So based on everything I've said so far, it means that we potentially will see dollar weakness as a result of Fed printing and swap lines. Remember that one way that Japan can source this liquidity is they can borrow an unlimited amount of dollars from the Fed. And where on earth do they get those dollars? Well, of course, the Fed will have to print them. So what does all this mean? Is it important? Why should anyone really care? And of course, the answer is because Bitcoin has always been the king at sniffing out liquidity. Bitcoin has a very, very, very good track record at finding this excess liquidity in the system and reacting positively towards it with violent upside moves. And meanwhile, we are seeing China ramp up de-dollarization efforts by dumping record amounts of bonds. Okay, that's not nothing. China selling record amounts of sums of US debt amid signs of diversification. And we've had Japan saying that their next intervention in their currency will likely have to use treasury sales. So if indeed, instead of get them to dump these treasuries, okay, this whole swap line thing can continue to build steam. Admittedly, at the moment, the volume is quite low. But if indeed we do see a ramp up in this, Bitcoin has a very, very, very good track record at sniffing out dollar liquidity. And it would also speak to a falling Dixie. Remember, which is ultimately what the Fed wants. They want a weaker dollar to prevent this whole dollar milkshake thing, wherein the dollar slurps up all of the other fiat currencies and messes up the export markets worldwide. Needless to say, a strengthening dollar is also not very good for risk assets, particularly not good for things like gold, silver, Bitcoin, which also typically trade inverse to the dollar. So is it possible that we see even more liquidity? Does this story continue to be one of liquidity? Is it possible that these swap lines are the start of another round of hidden QE, another round of QE that identifies as something else, another round of stealth printing? You let me know what you think. In the meantime, typically speaking, when I go fishing, we tend to get market crashes, so I hope you're weathering the storm, if that is indeed the case. Moreover, I actually hope that we're not having a crash. And even if we are, okay, know your levels. As always, respect risk. Have clear invalidation levels on your chart, and everything should be okay. I'll be back tomorrow. How much damage, should I say this? How much damage can really occur in one day, right? Famous last words. But in the meantime, I'm your boy Camel. I hope you're doing well in life. And until tomorrow, take care from me. All the best. Cheers. Bye.